We got some huge news for Palantir stock investors as the management team elaborated on the success of the business. Now, for a moment, I'm just going to ignore the company's stock price reaction to the quarterly earnings release. That had more to do with the overvaluation. And I'll share with you my proprietary discounted cash flow model, which I calculated to determine what is the fair value of Palantir stock to show you the extent of what I feel is an overvalued business. But that's besides the point. If I look at just the business and the recent developments, man, the company is firing on almost every cylinder. So let's take a look at that development.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
Palantir said that the customer count grew by 39% year over year and 8% from the previous quarter to 769 customers. Now, that's a relatively small number of customers to have for a company with a market capitalization near $250 billion. And it's because how much value Palantir delivers to each customer is extremely high. The price to employ Palantir is extremely expensive. Not very many companies can afford to. That's why the company has achieved so much success with government customers, because governments have very large budgets. They're not cost conscious. They don't have to worry about recessions. They can spend on products they see as something that's adding value. But lately, Palantir has done a great job in expanding to enterprises. By demonstrating value by lowering its cost to serve, it's attracted more and more business. If they can continue going down that cost curve, being able to lower their cost to service, they can expand the potential customers that can afford its services. And that's what has me really excited about Palantir stock in the long term. Revenue from their top 20 customers increased by 26% year over year to $70 million per customer. I talked about how much value they add to each customer, that these customers are willing to pay Palantir $70 million for its services. That's how high value service they are. In the quarter, they closed $930 million worth of enterprise commercial value bookings. That represented 84% growth year over year. Now, this is growth with business, not government. And so 84% growth in this category is very good news for Palantir stock investors. That shows that they're able to make their services more attractive to businesses, whether that be through lowering their cost to serve or by demonstrating its value more effectively. Either way, it's expanding the number of customers in U.S. enterprise and enterprise overall. And that's really the biggest opportunity Palantir has in the long term. U.S. governments can spend a certain amount of money, but U.S. businesses have a much larger budget collectively than the U.S. government or any of the governments allied to the U.S. And so this is where, if Palantir can continue to make inroads, will add the most value to the business in the very long run. So on a trailing 12-month basis, they closed over $2 billion of U.S. commercial bookings. The total remaining deal value grew 127% and 30% from the previous quarter. Their U.S. commercial customer count grew to 432 customers, which was 65% growth year over year and 13% growth from the previous quarter. And this is what I always look for when I'm evaluating Palantir's quarterly results, is their progress in this category. Because they are such a high value service, I'm confident that they will retain their position within the U.S. government as one of their most valued contractors. But with commercial customers, I'm concerned that their price is so expensive that they price themselves out in making their business affordable, right? Only 432 customers. There's millions and millions of businesses in the US alone, and they have only 432 customers, despite the fact that it's very well known, it's very well publicized that Palantir is the best in this category. So why aren't more US businesses hiring Palantir? The answer is that they're so expensive. You can't afford it. I would like Palantir services, but they're too expensive for me. I can't afford it. If they can continue to make progress, finding ways to make their product more affordable, then they open up a bigger market. And if they open up that bigger market and Palantir's service is so effective, those businesses that they do serve, they will grow profitably because they're employing Palantir. And so they will have a larger budget that they can use to spend more with Palantir. And that will drive growth and that positive virtuous cycle for Palantir as they serve more customers and make those customers more effective. Those customers will become larger businesses, which will have larger budgets that they will then deploy to Palantir again because they see how much value Palantir adds. And then they come back and that will create this positive virtuous cycle. Palantir is already starting down that path. If they can continue down that path and make their cost of servicing even lower their pricing, make their service more affordable, man, the opportunity here is massive. So you might say, if I'm so bullish on Palantir, why don't I have the stock rated as a buy? And it's because it's no secret how good of a business Palantir is, right? Everybody and their cousin knows that Palantir is one of the best businesses in the world. They are trading at a super expensive valuation. The current market price is $108. My intrinsic value per share calculation has the business valued at $28.52. That's even after I upgraded it, right? I recently increased this valuation by 33%. So the intrinsic value is 33% higher than where it was a week ago, 2 weeks ago for me. So the business is becoming more valuable. They're making great progress. It's just no secret to anyone, right? In fact, people are overestimating Palantir's success. And so that's the only reason why I don't have this stock rated as a buy, is because the valuation already reflects so much of the company's excellent prospects, not just for now, but for many years in the future. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.